In this video we are going to talk about great dividend stocks. So before starting, please like this video and subscribe to this channel for our future updates. Number 12. Intel Corporation, INTC. No one thinks of technology companies as dividend payers. Exceptions exist, especially with more developed tech firms. Intel's big and reliable semiconductor business for personal computers and data centers is a cash cow. While these aren't large growth areas, they are stable and have benefited from pandemic demand. Meanwhile, Intel has utilized its massive earnings to expand into new, more futuristic industries. One of these, Mobileye, is a significant catalyst for 2022. Intel will spin out the company as a public company, but will retain a majority interest. Analysts estimate Mobileye's standalone value at $50 billion or more, a substantial return on Intel's $15.3 billion purchase price 4 years ago. Intel's capital expenditures will be reduced, releasing funds to reinvest in the core business or return to shareholders. Today Intel pays a 2.7% yield. Number 11. Lockheed Martin Corporation, LMT. Defense had a bad year in 2021. Investors panicked as the Biden administration announced its withdrawal from Afghanistan. Denied new contracts by the U.S. government and international nations, Lockheed Martin remains one of the top dividend companies to buy in 2022. Finland just awarded Lockheed Martin a $9.4 billion contract for 64 F-35 combat fighters. But shares are still down. This is because many institutional investors are no longer willing to buy companies that manufacture weapons. Military contractors have a lower entry threshold because institutions avoid them. Lockheed Martin stock trades at 13 times anticipated earnings and yields 3.2%. Number 10. Raytheon Technologies Corporation, RTX. In addition to Raytheon, Raytheon was founded by combining United Technologies and Raytheon. This entity spawned enterprises like elevators and air conditioning. Raytheon was left with a focus on aircraft, drones, satellites, and cyber. Raytheon's stock price has fallen far below the S&P wink with tongue sticking out 500 due to the defense industry's downturn. Raytheon is not solely a defense contractor, it also has significant exposure to commercial aviation and space. Analysts expect earnings to expand at a double-digit rate in the future. RTX stock also yields 2.4%. Number 9. JP Morgan Chase & Company, JPM. On the list of greatest dividend stocks for 2022, it might be too late. After all, JP Morgan stock has risen over 25% in 2021 and is reaching a record high. Over the same period, the largest U.S. bank's main business has risen substantially. Banks like JP Morgan are thriving thanks to a burgeoning property market, rising stock market activity, and lower interest rates. Both the retail and investment banks are performing well. The bank still trades at just 10 times current year earnings. JP Morgan's allure is heightened by its legendary CEO Jamie Dimon. The stock also pays a 2.5% dividend. Number 8. New York Community Bancorp Incorporated, NYCB. New York Community Bancorp is a safe higher-yielding bank. It is a New York City-based regional bank that specializes in multifamily loans. The bank creates low loan-to-value loans to minimize losses even during economic downturns. During the 2008 to 2009 financial crisis, New York Community Bancorp remained profitable and paid its dividend. In 2021, New York City's pandemic-induced recession lifted the bank's shares. An impending merger with Flagstar Bancorp Incorporated, FBC, has pushed the stock from $14 to $12.50. With a 5.6% dividend yield, it's a superior entry point for income investors. Number 7. Westpac Banking Corporation, WBK. Concerning foreign banks, Westpac appears promising. It is a titan of the Australian banking business. Shares fell from $20 to $15 recently. Part of the reason is China's economic slowdown affecting pricing of vital Australian commodities like iron ore. Australia's economy is closely linked to global inflation and growth. Investors have begun to focus less on inflation and more on rising interest rates and a slowing economy. If inflation rises again and commodity prices rise, Westpac and other Australian names should recoup their recent losses. Australian banks are known for paying out big dividends. WBK stock pays a dividend yield of 6.2%. Number 6. Grupo Aval, AVAL. Colombia's Grupo Aval is another worldwide bank. Toll roads, infrastructure and other concession assets, such as toll roads, are owned by the holding firm. Crude oil accounts for about half of Colombia's exports. As a result, the economy has struggled recently. Colombia has recovered quickly from the epidemic, as oil prices have risen and the travel and tourism sector has surpassed 2019. Despite this, Aval is still down 30% from pre-pandemic levels, as foreigners haven't noticed Colombia's rebound. Even though the corporation recently reported record quarterly profits. Aval pays a monthly dividend of around 2.5 cents per share, representing a 5.5% dividend yield. Number 5. Realty Income Corporation, O. Aval isn't the only 2022 monthly dividend stock to consider. Also consider Realty Income REIT, owner of a diverse portfolio of retail and industrial assets. 7-Eleven, Walgreens Boots Alliance Incorporated, WBA, and FedEx Corporation, FDX. When it comes to e-commerce and the pandemic, Realty Income's standalone retail properties have fared well. Earlier this year, it merged with Variety, doubling its property portfolio. Real estate income's company and share price are unlikely to increase quickly in the current retail environment. But it's the most famous monthly dividend firm, and shares yield 4.3% going forward. That's a generous offer in today's low-interest world. Number 4. BristolMyers Squib Company, BMY. Pharmaceutical and biotech companies have had a rough year. Unless a company has a COVID-19 vaccine or therapeutic angle, investors haven't been impressed. A decline in the sector's stock prices has started to open up some prospects for 2022. For example, BristolMyers stock is down 20% since the summer. Due to the drop, shares currently trade at 7 times forward earnings. With such a low valuation, the company may be in peril. But management expects a 1% annual revenue growth through 2025. When growth meets a low price-earnings ratio, positive things happen. Despite many significant mergers, BristolMyers Squib should achieve a constant profit trajectory and a higher valuation. BMY now produces 3.7%. Number 3. 3M Company, MMM. 3M is the ultimate dividend payer. 3M, well known for Post-it notes, has a diverse product portfolio for both consumers and businesses. 3M makes insulation, lubricants, medical supplies, PPE, dental tools, and cleaning supplies. 3M is a wonderful way to invest in the American economy because it has so many items. As 3M's revenues and earnings expand decade after decade, its exceptional diversification makes it a solid portfolio choice. As a result, it has increased its dividend for over 50 years running, making it a dividend king. It now yields 3.4%. Number 2. Northwest Natural Gas Company, NWN. Utilities aren't the most glamorous stocks. People don't discuss power companies at cocktail parties. Diverse income sources are often overlooked by dividend investors. Northwest Natural is another dividend king, with a 50-year dividend rise streak. The Portland, Oregon-based natural gas utility has benefited from the recent boom in the Pacific Northwest's economy and population. In 2021, utilities underperformed the market. Concerns about rising interest rates led investors to devalue utility stocks. However, Northwest Natural's stock price is down almost 30% from its pre-pandemic peak, and it pays a 4.1% dividend. That should be enough to persuade some income investors to choose it over a bond or a bank CD. Number 1. South Jersey Industries Incorporated, SJI. From the west to the east, South Jersey Industries is the greatest dividend stock for 2022. South Jersey principally runs two New Jersey gas utilities. One, as the name implies, covers the state's south. The other is about the NYC suburbs. South Jersey moves slowly. South Jersey's population growth is slow compared to New Jersey's. But most income investors probably don't mind. A PE of less than 15 is a bargain in South Jersey. Until 2022, shares provide a 5% dividend yield. The stock is down around 15% from its 52-week highs, making it a good buy. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.